How's it going, everyone? I'm going to talk about Silicon Valley job losses and how a lot of these tech giants who were once thought to be the rulers of the stock market, at least in the tech field, they are sweeping, they're suffering sweeping job losses. And lately it's Amazon. It's become the latest tech giant to make sweeping job cuts among its office staff. And of course, last week, Facebook/Meta, Instagram, WhatsApp, they cut 13% of their workforce. And of course, famously, Elon just slashed half of Twitter's employees, even around the world in Asia, 90% job cuts. Big, 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 big loss of employment for those people. So overall, US-based tech companies have scrapped nearly 30,000 jobs just this year alone, which is massive, massive. So we're going to take a look at some of these things here. So take a look at this chart. It's breaks down pretty easily how many people have lost their jobs across the Silicon Valley companies. Amazon, roughly 10,000. Meta, 11,000. I believe it was 13% of their workforce. Twitter, nearly 4,000. But as you can see, Microsoft, Stripe, Salesforce also has cut a lot of people, but it's not nearly as bad. So good for them, right? So why have there been so many job cuts in the tech companies? I mean, these guys are, rulers of the digital universe to some degree, but it's the triple whammy of basically the slowing economy, inflation, and an end, keyword end, to pandemic-driven growth that basically froze people in their houses. And this all affected the tech industry by quite a huge margin. Though for some companies, they did take some huge gambles on emerging tech, okay, that would take many years to come to fruition and let alone make a profit. This is very specific to like Meta and the metaverse. They lost billions and billions and billions of dollars, just like close to 10 billion just in this year alone. So some companies took those gambles, and then the other ones were affected by the inflation, slowing economy, plus the end of C19. So with the quarter earnings report, there's lots of huge concerns that we're moving into a recessionary period of slow economic growth, and this is affecting job growth. So naturally, this is creating a lot of uncertainty, and it's hard to predict consumer behavior and spending given given inflation and what is going to happen during the holidays. And what happened during C19? Well, these tech companies saw, of course, a huge boost, a period of outsized economic growth. They saw massive amounts of people at home, spurred by of course, C19, and they had no choice. What we're seeing, according to Business Insider, what's happening is a correction, not only a correction in the market, but a correction specifically for these tech companies. Let's talk about Amazon specifically. They lost 10,000 jobs, okay? So the online retailer had actually warned in recent months that it was going to slow down hiring. It was going to halt warehouse expansions. And then it revealed that 3% of its corporate employees would be just slashed, gone. 10,000 jobs out of the way. Now, this comes after the company lost $1 trillion in market valuation, which is massive. That's nearly 50%, okay? It's incredible. Amazon was the first publicly traded company in history to lose $1 trillion in market valuation. That's massive in this volatile market. Jeff Bezos' founded company, okay, they had a market valuation close to $1.88 trillion on July 2021. Saw this fall, okay, on Wednesday, pushing its market value down to $878 billion. That's 50% loss of its stock price in 1 year alone. Of course, who can blame the customers on spending a lot less on Amazon, right? The company posted disappointing results for the third quarter earnings, and of course, it predicted less than spectacular sales for the upcoming holiday season. Well, Santa Claus is going to have a much lighter gift bag this Christmas. Now, to make matters worse, the giant projected the company's slowest on record fourth quarter growth between 2 and 8%. Slowest ever, which is pretty crazy for Amazon. All this leads to fears of recession. Recession. But anyway, let's see the other companies. Famously, Twitter cut around 3,700 jobs, laid off half its workforce across different teams ranging from communications, content curation, product engineering, etc., all following Elon's brutal takeover. The billionaire said he had no choice but to make the job cuts because Twitter was losing more than $4 million a day. That's crazy. Problem for Elon is almost all of Twitter's revenue currently comes from advertising. Now, there was a massive campaign to convince these advertisers to pause, advertising with Twitter because of Elon's takeover. I saw it as a non-safe space for advertisers. A big number of brands have halted advertising spending on Twitter, including Pfizer, Volkswagen, GM, and this reliance on advertising is something that Elon, of course, wants to change because he needs money. Facebook, they cut 13% of the workforce, more than 11,000 employees, one of the biggest tech layoffs this year. And the announcement was made after the firm grappled with weak advertising market and, of course, increasing costs. Everyone's increasing, right? Every cost is increasing, not just for households, but even for these big, giant, multi-billion-dollar companies, which is crazy because they don't want to. I don't think they want to stop growing. They just have no choice. Like its peers, Facebook, Meta aggressively hired during the pandemic to meet the surge in social media usage because everyone was stuck at home. But these boom times have basically dissipated, right? Consumers, advertisers are pulling the plug on spending in the face of soaring costs. And Meta, poor Zuckerberg, poor little Zuckerberg. So Meta, once worth more than $1 trillion, now valued at, get this, $256 billion after losing more than 70% of its value just this year, which is a staggering amount. That's crazy. And a lot of it was due to Zuckerberg's investment in the metaverse, okay? The possibility of this new crazy product, right? But it just wasn't taking off. It was draining an enormous amount of resources and money for Facebook. Now, Microsoft did fire some people, but it was less than 1,000. Now, given that it's less than half of 1% of the company's 221,000 employees globally, it's not that bad. So for a big, giant tech company, it is doing okay. So other companies on the list like Stripe lost 1,000 jobs, Salesforce, hundreds of jobs lost, Intel, very few layoffs, but reportedly planning on major layoffs, likely numbering in the thousands. But what does all this say? Well, first of all, let's talk about Apple. Apple has done pretty well considering where the other ones are standing right now. They haven't really announced any major layoffs. They're actually valued at $2 trillion. I mean, this is amazing. They're actually valued at an insane amount right now. Right now, they're valued at roughly the equivalent of Amazon, Alphabet, Google, and Meta combined, which is just staggering. So they're doing something right. And they haven't announced any crazy major layoffs. If there is one company, right, where it might be worth parking your money during this recessionary period and stock market weakness, it could be Apple. So what do all these things point to? Basically, some of the biggest tech companies in the world are on a hiring freeze. On top of that, they've had to really lay off thousands, tens of thousands of people. And this just goes to show that there is this recessionary period. And it's not something we should all take lightly. We should be very, very prepared for the economic slowdown that is going to happen. All right, that's it for now, guys. Thanks for watching. Smash the like, subscribe if you haven't. I'll see you in the next one. Can anybody out there hear me? Can anybody out there